there are two ways of doing the depreciation. You as the analyst have to determine which one you're going to do. The first way is, as you just said, you take the you deduct the salvage value and straight line that amount over the life of the asset, 20 years. Or you can deduct the straight line without deducting the salvage value and just deduct the entire amount over the 20 years.
Okay.
You just have to remember, when it comes down to year 20 and you're determining the gain on your disposal of that asset,
Yes.
how you depreciate it will determine whether you tax that gain or not.
Okay.
Okay?
Okay.
Do you have any other questions?
Oh, let's see. I'm gonna look through my work
Okay.
again and
For
then
people
I'll
of,
ask you.
for people who are signing on,
Yes.
Christine just asked me a question about depreciation. I'm recording this session, and if you don't have any questions, you can just listen in to the answers that I'm giving, some of the student questions. But I don't have any planned review. This review session is for your questions about the California Best Trucks case or the final examination. So it's up to you. If you don't have any questions and you can just want to listen in, nothing wrong with that. So I just took a question from Christine. Does anybody else have any questions? Erica, you need to turn on your microphone. There you go.
Yeah, I was switching between screens. On the payback, is that just for the initial 1 billion, or does it include the training?
The training is just an additional operating expense.
It's just
It has
another
nothing-
FC?
Yeah, has nothing to do with the investment, right?
Okay. And do you want that to just be included on the line for the FC line?
I would put in another line called training costs, and then
Okay.
you'll just have that for 2 years.
Okay, so training, so separate, and no payback. On the other question that I had is on the warranty.
Yes.
The warranty, we'll just go with the $500 right now. So $500 warranty each year has the 3% increase, correct?
Well, it's $500 every year for 5 years for each product sold, right?
Mm-hmm.
Every unit sold has basically a $1,500 cost,
Mm-hmm.
$500 a year. Your job as an analyst is to take those 5 years of costs
And get the net present value for it.
Exactly,
Charge
and
it
that's
in the
how
current
much
year.
you'll charge.
But do we need to take into account the inflation for the 500?
I definitely would think so, yes.
Okay. So,
But then once you get that number, you do no need to inflate it any other time in your analysis.
okay, so don't inflate it if you've already inflated it.
Exactly.
Don't double inflate.
And some students sometimes do that, and you're exactly right.
Okay. Okay, so that would be a nested formula. Yeah, I haven't completely finished going through yet, but those were the three things that were.
Did you send me your WAC calculation, or have you finished your WAC calculation?
I finished it, but I wanted to work on the analysis part before I sent it over. Since I have the cells linking to each other.
Okay.
Okay. It once I update the one, it'll update any of the others on any corrections.
Okay, very good.
I know you've seen my spreadsheets before. I like to use the linking cells so that they auto update.
Very nice. Okay.
I know what I had a question on. On the analysis, do you want to see us adding up the variable costs, or do you just want to see the total?
Well, I would like to see the warranty variable costs separate on a separate line, but all
Well,
your
on
other,
a separate line. So what I mean is underneath. So on my Scratch spreadsheet, I've got inputs, base case, and then underneath that table, I've got the labor cost, the component cost, the price per engine.
I would include all those together.
Right, and then I've added them together, and then I'm having the variable cost reference that cell,
Perfect.
and then I have underneath that the warranty cost for the bus and the warranty cost for the
That's fine.
engine, and adding it up.
That's great. And then you have your fixed cost line too, right?
And then I've got, yeah, and then over on the 20-year table, I've got variable cost, and then variable cost warranty, and then FC, and then FC training.
And don't forget depreciation.
And yeah, the depreciation's there with the EBT. I literally took the last assignments table
Okay.
and just
You're
stretched
fine.
it.
Looks good. That's good.
Now I just have to figure out all the warranty with the inflation.
Yep. That's what separates the A's from the B's.
And I don't think I've got my WAC quite right. But I want to double check it before I send it over to you.
Okay. All right. Sounds good. So if anybody has a question, just feel free to ask. If you don't have a question and just want to listen in, just that nothing wrong with that. I'm just taking questions involving the California Best Trucks case, and also if anybody has any questions on the final examination work, this is the forum to do this. Remember, we have class again on Tuesday this coming week. That's just going to be voluntary, where I'll be available for more review questions if you have it.
We do not need to calculate a break-even point for this, or
No.
is that okay? So not the break-even or the contribution margin.
Don't have to worry about any of that.
Okay, I'm deleting that from my.
You should have to answer your question, you should have, Maria, you should have a separate spreadsheet for each product, and the products are determined by the engine. So you're going to have a Los Angeles engine spreadsheet and a California engine spreadsheet. So 2 spreadsheets for your analysis.
So I have a question.
Yes,
Like exhibit 2, the investment needs.
yes,
We have year 0, we got 1 billion.
yes.
Then year 2, 100 million.
Well, that's not an investment. What does it say?
So, let's see.
It says that they're training costs.
Okay.
So those are just two additional years of an operating cost just for those 2 years
Yeah.
of 100 million. So that's part of your expenses.
Okay. Okay.
Good question.
Okay, thank you for clarifying that.
Okay, Christine, good. So
All right.
your investment in
Yes.
year zero is $1 billion,
Yes.
and your other year zero number is going to be your working capital.
Okay.
Okay.
Thank you.
Sure.
Professor, I know that Christine started with the depreciation.
Yes.
One of the two ways is what we've done previously on our assignments, correct?
Correct.
Okay.
That's a good question. I'll go over that one more time. There's two ways of depreciating this asset. The way that we've been doing in class up to this point in time on our assignments and our review is just taking the investment and dividing it by the number of years, and whatever that is per year, you expense it as a depreciation. Then whatever your salvage value is in the final year, that's additional cash coming in, but because you fully depreciated the asset over the life, you'll have to pay a capital gain tax, and that's where the tax calculation comes into in that final year. The second way of determining depreciation is taking the investment and subtracting from it the salvage value, and then having a base depreciable amount, and then dividing that depreciable amount by the life of the asset, and there's your depreciation. But you have to be careful. If you do it that way, your depreciation is going to be less the salvage value over the life of the asset. But when it comes time to recording the salvage value at the end of the life, year 20, you have to ask yourself a question: do I have to pay tax on that salvage value with this method? The other method you do, because it's all a gain in the final year because you fully depreciated. The second method, you're going to have, you're depreciating it down to the salvage value. Do you record a tax on a gain or a disposal in that method? Make sure you guys think about that if you do it that method. So for people who've just come on just in the last few minutes, Ashley and Barbara, I'm just taking questions from students. I'm recording this session, and if you have specific questions, just ask. If you don't have any questions, you can listen in to the questions being asked and take notes. I do not have a planned review. It's all based on your questions. I've gone over these in class, and it's your job, if you have any specific issues or questions, you ask them here, or just listen in, and we have another review session on Tuesday night in class. That's voluntary, but it's a review time available for additional review. Just to review, yes.
Thank you, Professor. I actually had a question about the depreciation. So just heard what you went to Risho, so I hope that helps. Other than that, I didn't have a question right now.
Okay.
However, if some questions come up, I'll make sure to email you or try to get on Tuesday.
That's my point, Barbara, and that's good. I'm available all weekend, and what I'm having a lot of students have already done in the last week is email me their WAC calculation or email me their original base analysis for one of the projects, just to make sure they're doing it correctly. I give them some help, a little comments. I don't do the problems for them, but I show you or point you in some direction.
Okay.
And then you're off and going. So if you want to do that, I'm available all weekend. Now I'm in review session all day today. So I'm probably not going to get to answering email questions until tomorrow, but just so you're aware of that, but I am available. And if you don't have any questions or any concerns, try to work out the problems this weekend and then come to class next Tuesday, and then we can review them there as well.
Okay, perfect. Thank you, Professor. But I'll be here to listen to just any information that comes up.
Very good. Okay,
Thank you.
Barbara.
Professor, so I had a question about the debt rate. I know that I emailed you about it, but I was just confused as to how am I supposed to find a different number than the one that was put into the information for the pay?
Well, it says, are you talking about the cost, the interest rate on the debt?
No, I think I was talking about like the debt ratio percentage. Or was that a different number then? Because I think that was for the WACC calculation.
Okay, hang on. Well, it tells you in the case that the debt ratio is 50%.
Mm-hmm.
So if the debt ratio is 50%, that means your percentage is 50% for debt.
Right.
So what must it be for equity?
50.
Very good. Is that what you had?
Yeah. Because I
Oh.
know you had said that I didn't have that, or maybe misreading the.
I was I don't know if I was confused about your debt ratio. I was questioning some of your other data.
Okay.
But the 50 is correct.
Okay.
Okay.
All right. Thank you.
Okay. So Dustin Keefe just came on board. Dustin, I'm just taking questions from the students. If you have a specific question, just shout it out. If not, you just feel free to listen in to the questions and my answers. I do not have a planned review session. This is just questions from the students about certain issues with the work.
All right, so I have one question. How are you doing this morning?
I'm doing fine, Dustin. Thank you.
So on the warranty, do we multiply the warranty by the 11,000 cells, or do we just do the basic warranty?
Well, you remember you're having to determine, you have a parts cost, you have a labor cost. Those are per unit. So you're multiplying those times the number of units you're producing, 11,000, right?
Mm-hmm.
Warranty is the same thing. You're
Okay.
determining the warranty cost per unit, and you're going to have to multiply that times 11,000 units. Now, let me give you guys a little hint, since you guys are so nice by coming into today. If your warranty cost for both the bus and the engine, they have to be somewhat north of $60 million per year. That gives you a little check figure. If your warranty costs per unit, for total dollars, not per unit, but total dollars, if your warranty costs are not north of $60 million, you're marching up the wrong tree. So there's a little hint for you there as you're doing your numbers. That's for both the bus and the warranty. North of $60 million a year. That was a good hint. You guys take advantage of that, baby.
Thank you. That was a really good hint. I think that's been one of the more frustrating things, is not being as familiar with the calculations, is how to guesstimate if I'm accurate. On the calculations I do at work, I know something's off by that total doesn't look right. So that's a huge hint. Thank you.
Okay.
Just a side note, Professor, I want to
Yeah.
say thank you for the YouTube videos that you have curated for this
Sure.
class. They've been very, very helpful with a lot of these concepts.
Good. Thanks for the feedback. That's important. Thank you. If I may, let me give you another couple of hints to help you all, since I'm being very charitable today. In your spreadsheet, remember, as I said earlier, you're basically doing two spreadsheets. One spreadsheet for the Los Angeles engine and all the costs associated with the bus and the engine, and then one spreadsheet for the California engine. So basically do one engine first, and then if it looks good, then you just copy that and adjust it to whatever the numbers are for the other engine, the California engine. So you should have a revenue line, the sales line. You should have a variable cost or variable cost line, and that variable cost line will be made up of the variable costs like labor, parts, and the engine. Those are all your variable costs per unit. Then you should have a variable cost line for the warranty. Keep that separate because it's a little bit easier to keep track of it for me to grade, and I know how you're doing it. So have two variable cost lines. One variable cost line for the variable costs given in the case per unit, labor, parts, and the engine, and then another variable cost line for the warranty on the bus and the engine combined. Then you should have a training cost line for those training costs that I give you in the problem. Then you have your fixed costs, or in this case, they call them sales administrative expenses. Then you have your depreciation. So those are the lines you should have as expenses coming down to net income in your problem. Plus, then you have your tax line, and then you get your total operating income. Then from that, you add back in depreciation, working capital, or subtract it, and the usual procedure that we've done in our class. But make sure, for the sake of your grade, keeps these expenses separate, because then it's easier for me to see that what you're doing and how you're doing it. If you combine everything into one line, and I don't tie out to that number, then you're going to get marked points off because I don't know how you got to that line. So if you keep things separated, like I just said, it's easier for me to see what you're doing. And so if you just miss one line, it's not going to affect you in the points as much as if I can't figure out what you're doing. That's an important thing to remember. And one last thing in regards to the paper, which a lot of students forget about. This is a good helpful hint if you want to get an A. If you go to page 2 at the bottom of the page where it gives the 6 questions that you have to answer in your paper based on your data given in your case, in your spreadsheets, the very first question has nothing to do with any of your analysis. It says, how much importance should be given to the energy cost situation? Well, remember, you're a business analyst. You're a financial analyst here. So yes, you are crunching numbers, but also you're giving an interpretation to Mr. Livingston, who's the CEO of this company. You're giving an interpretation whether they should go ahead, A, with the project, and B, should it be one engine or the other? Well, one of the main reasons why you're given this task is because the company feels there's a market now for these products. And why there's a market for these products? The energy situation. In Southern California, people don't want to drive. It's too expensive. So let's try to take mass transit. So that question number one is just as much part of your analysis as is all the other data and number crunching that you're doing, because it affects why the company is doing this. So some explanation, some interpretation, how much importance should be given to the energy cost situation. I'm anxious to see your opinion and interpretation of that. That's just as important as crunching the numbers as far as giving the overall opinion about this decision that you're helping Mr. Livingston do for the company. I think that's an important thing to say, because a lot of students get so wrapped up in the numbers and answering those questions involving the numbers, they totally blow over the energy situation, and I end up taking points off because, hey, that's a question too. Why is there no discussion about this? So remember that when it comes time to putting this all together. Another excellent tip from yours truly. I'm done giving tips for the day.
I do remember what one of my other questions was. Is
Okay.
it okay to have supplemental tables
Sure.
as long as we have the 3 required?
Yeah.
Okay.
Anything you feel is necessary for you to show me how you're thinking and how you're doing it is fine.
Okay. Another question.
Sure.
Is the WAC our discount rate?
Well, I'm not going to answer that question,
Okay.
but I will say this: in all the assignments and work we've done in class, what has been our discount rate?
Okay.
Okay.
Mhm.
Okay. Very quiet out there in internet land.
Hi, can you hear me?
I can.
Am I the only one on?
No, we have 9 other students on.
Okay, sorry.
Some of them have asked questions and I've responded. It's an open mic, so if you have a question, Ms. Newland, go right ahead.
I just finished assignment 4. I just wanted to be sure that you're going to be releasing the final, was it this weekend?
I already posted it last week.
Really? I can't find it. Maybe I'm not looking in the right spot.
There should be a folder under assignments and examinations, final
Yeah.
examination. It's not there?
I
Hang on.
have it.
I don't think it's there, Professor, because I've been looking for it too, and I didn't find it. The most recent one I found was assignment 4.
Hang
Yeah.
on.
I don't see it either.
Okay, just a sec. God, I could have sworn I did that last Tuesday. Hang on.
Well, at least it's not just me. Thank God,
No,
because I was.
that's me. Professor's wacko. Hang on just a sec. Well, assignment 4, okay, yeah. I'll post that this afternoon.
Okay.
Assignment 4 you're still working on, correct? Or some of you.
Yeah.
And I'll post that this afternoon.
Okay.
Thank you. I know why now I didn't do it. I wanted to get through most of the week with you doing assignment 4. And now
Okay.
I have it all ready to go. I just have to upload it. So look for that this afternoon as soon as this review session is over.
Okay. And then just to be sure on the California this Trex case, I should have 2 or 3 spreadsheets.
Well, you should have one spreadsheet with different tabs inside that spreadsheet.
Okay,
One tab for your WAC calculation,
okay,
one tab for the product with the Los Angeles engine,
okay,
and one tab for the product with the California engine.
okay. Thank you.
The class on Tuesday will talk about the paper and the format of it and what I'll be looking for. in that document that will go along with your numbers and your spreadsheets that you will provide. Also in Tuesday's class, we will talk about the final examination after a couple days of looking at it. And we'll talk about any last minute adjustments or questions you might have with your numbers in your spreadsheets. That'll be on Tuesday's class at 6 o'clock. Christine, to answer your question, the final examination is not timed. It's just like your previous assignments. I post it, you can download it. You have until Sunday, August 16th to post your completed work for the final. The examination is not a timed exercise. It's a take home and a posting to Blackboard, just like what we've done with our assignments and the midterm prior to this.
Thank you.
Sure.
My WAC calculations, I just email it to you.
Yeah, just go ahead and email it right now.
Okay, thank you.
Professor Hassan.
Yes, ma'am.
Okay, so what rate are we gonna use to calculate the present value for the warranty costs? Is it the 30%?
30%.
I don't know, I'm asking.
Usually the rate to determine remember the present value rate like we did in our regular analysis. What rate do you use when you determine your discounted cash flow? It's usually the weighted average cost of capital, your cost of capital. That's the cost of your money. So I would think it'd be advisable
Mm-hmm.
to use something along those lines to determine your net present value.
Okay, good, thank you.
Okay.
Okay.
Ms. Newland, have you emailed me your work yet?
I'm sending it right now.
Where are you calling from?
The bedroom.
No, what city are you in?
Grand Terrace.
Grand Terrace. Where is that?
It's located between, like, right before you get to Riverside. We're on the edge of Riverside
Got
and
it.
San Bernardino County.
Okay, so it's going to take email a little bit longer to get here. No, I'm teasing. Okay, I'll wait for it.
Thank you.
Okay, I definitely know that that's not right because my warranty is over 70. So
And you're
that hint
over
of
70
60.
million, your
My whack is off. Or
whack
not
is
my
off.
whack, my whack is off. And I need to double check my calculation.
Well, I'm going over Anita's whack right now, and Anita, you're just a tad off, and the reason why is in your problem, you have in your cost to after-tax cost of debt, Anita, is right on the money, all right?
Okay.
But your cost of equity in the case, it tells you that the market rate premium is 8.5%. You have indicated in your WAC that that's market rate of return, thus you're subtracting risk-free rate out of it. The market
Okay.
rate premium is given to you in the case as 8.5%. I've already done the arithmetic for you. If
Got
you
it.
fix that, then you will have your correct WAC.
Thank you.
Does that help?
Yes, thank you.
Okay. So you might want to take a look at your WAC as well, Erica.
Get there to begin with? Like, how did you come up with that answer? I just know by the color. This color means that color. So, can you see my spreadsheet?
I see it, yes. That's a good way of doing it. Nothing wrong with that.
Mine
But
looks
it
like that
doesn't
too.
help me like when I want to go back. So now I have to go back and plug in the numbers, and I'm like, but how do I get orange?
Oh, so you're just like one of your accountants.
Yeah, like I didn't learn anything from them.
I'm highlighting the text and my spreadsheet with matching.
That way, yeah, you know. I try to do that too, but my text is like a picture. How did you get it to so you're able to highlight it?
So it's probably the whatever program you're using to open the PDF.
Okay.
The
Or you
program
can download the Word doc version,
that's
right?
true. If you download the Word doc version, you can highlight it. But my guess is if you're viewing it as an image, that it's because it's a PDF viewer that doesn't allow you to modify.
Okay. Yeah, probably. I didn't see.
That's why I give you two versions. Did I give you two versions?
No, you only gave us the PDF.
You want me to load up a Word doc for there?
No,
So if you go and download, what program are you using?
It's just I'm not sure because like when I open it, it just pops up like a an internet PDF.
An internet PDF. Try right clicking on anything.
Okay.
Sorry,
I
do text.
I don't need to be part of this conversation, do I?
No.
Okay, good.
About having a table.
Oh yeah, you're kind of creating more work than you really need to do here. This
Am
could take this could take like 2 minutes if you just put it in a quick little dirty spreadsheet.
And I put it in a spread. So I've got just a table with the years, the inflation, and then the NPV.
Yeah.
I couldn't figure out how to do the NPV without having the table. Oh no, I just realized why I was being really thick with that. Yeah. Yep. I just realized what I've been very thick. Uh-huh. Yep. This is why I don't do work after I get my child down to sleep. Because between work and my child, my brains are sucked out of my head.
As I said, I'll be here all weekend. And then we have class next Tuesday that you also have time available to review with me. And then finally, your last possible review will be with me next Thursday afternoon in our office hours from 3 to 5 p.m. So about 10 minutes left of our review session today, folks.
Okay, and if we send it to you, maybe like 24, 48 hours, we'll hear back.
I'll get it to you tomorrow morning.
Okay.
I won't be able to work on it today because I'm online till 6 o'clock tonight, and then I'm going to start drinking heavily. So I'll get to these review questions tomorrow morning. Okay.
Okay, that sounds good. Thank you.
So, Professor, for the I'm on my spreadsheet
Yes.
for the equipment costs. Would that be? It wouldn't. Would that be for the whole for per bus?
Well, you mean the equipment cost for the investment or the expenses?
This for the investment.
Well, it says in your chart, on your Exhibit 1,
Mm-hmm.
excuse me, Exhibit, excuse me, Exhibit 2,
Mm-hmm. Okay.
year 0, it's $1 billion.
Yes. Okay.
That's your investment cost. That's the purchase of the assets to create this product is $1 billion.
So where it says for me, where I would put the base case,
Yeah,
would I put the amount of the bus and then the investment for 0? I put $1 billion, right?
yeah. For year 0,
Mhm.
investment would be $1 billion.
Okay.
Then you have to determine years 1 through 20,
Mhm.
sales revenues, the variable costs, fixed costs, depreciation, tax, just like it says on our sample template. So what I would do if I were you, Carl, is at the end of this session today, I'm going to be posting the recording of our review session that started at the noon hour.
Mm-hmm.
And a lot of these questions were asked and we talked about them at that time. And you
Okay.
should replay and listen to that review session. It'll be
Okay.
very helpful.
Okay.
And when I post up that review session recording, I will send an email to everybody letting you know that it's up.
Okay.
Okay?
Yes.
But I apologize. I can't go past the 1:30
Oh,
hour
that's
because I have another review session starting at 1:45.
okay.
Another class.
No worries, because I just got in.
That's okay. That's why I recorded it, so you can go back through it. I think it'll be very helpful for you.
Okay.
And then I also will have a review session on Tuesday during our regular class hours at 6 o'clock.
Perfect. Yeah, I got that.
Okay, good. Okay, guys, I'm going to stop our broadcast for today. All right. Thank you all for participating. I hope that this helped you a little bit. I know this can be a little bit overwhelming, but again, send me your drafts, send me your work, and I'll be happy to look at them. And I will see you all on Tuesday evening in class at 6 o'clock for review. I will post two things this afternoon later on. I will post the recording of this review session, and also I'm going to post our final examination a little early, post it to Blackboard so you can take a look at it. And even though a lot of you are still working on assignment 4 and working on this, why not? Let me throw some more work at you this afternoon. Well, let's make it everybody smile. So I'll put that out for you later today as well. So thanks, everybody. Professor Hannessy signing off for Saturday. We'll see you all later, okay?
Thank you.
Thank
Okay.
you.
Thank you.
Bye-bye.
Bye.
Thank you.